For Global Business Update, Michael Wilson joins us now from London. Good morning, Michael.
Morning. Yes, so a bit of a bounce back again on Wall Street last night, and that was reflected through the Asia-Pacific markets. The Australia's index S&P ASX 200 gained, is the big one actually, gained 1.68%. The Nikkei up 1.38%, and the yen rising. Yen rising a little. Hang Seng on Hong Kong 1% up. The Shanghai Composite ticked very, very slightly higher. As you know, the China Communist Party Congress is continuing, and Beijing has delayed its key economic figures as the leaders are actually meeting. Now, President Xi over the weekend said that the economy in China was not dependent upon the kind of rapid growth that it has actually seen. The decision to withhold those numbers for the moment, at least, has been taken as very rare by some experts, and also maybe they're saying a sign of further weakness as far as the world's second largest economy is concerned. However, the head of China's National Development Reform Commission said that the country had picked up significantly in the third quarter. And again, you know, what we were waiting for from that Congress was some kind of view, not so much about economic growth, but whether there was going to be any change in the zero COVID policy, which, as you know, has been responsible for cutting out a lot of China's economy over the past few months. But apparently no change in that. The IMF is saying that elsewhere, that Asia itself could be a bright spot amidst the global turn down during the year, especially Southeast Asia. Its forecast growth of between 4% and 4.3% this year and into next as well, but well below the average 5.5%, but nevertheless quite a big boost for Southeast Asia. If you compare that with Euro area of US 3, the Euro area 3, the US about 1.6 and 1% and so on. And it's also said that Asia Pacific's travel industry could be the first to recover by 2023. So let us turn our attention to the United States then, first of all now. And stock futures up about 1% after the NASDAQ had that big turnaround, and Dow as well. Gaining a lot. The Dow gaining 550 points yesterday. It's up about 300 points as far as futures are concerned. This was direct cause, not so much of what's going on in the economy, but in terms of corporate news. Amazon, Meta Platforms, Microsoft, that did rather well. Well, at least the text did rather well. This is on the back of Bank of America and Bank of New York beating earnings estimates. And another pivot came from the United Kingdom, of course, as Jeremy Hunt, the new UK finance minister, reversed all the tax cuts, which I'll come on to in just a second. EU Financial Services Chief, she's called Mairead McGuinness. She's been calling on the United States to create new crypto rules, warning that digital assets could pose a threat to financial stability around the world if they're unchecked. And she's been speaking out about, and then hopefully asking the United States to do something about it. France's central bank, staying with the EU, François Villeroy de Gallau, who is the head of it, has been saying that the recent turmoil in the UK's bonds markets illustrates precisely what happens when fiscal policy starts not to run in lockstep with monetary policy, and there'd been a consistent policy mix between central bank and lawmakers or politicians, and that he's talking about. He said it came out with quite a good phrase actually. The vicious loop, that was it. The vicious loop of governments face if they undermine efforts to erode what the central bank is doing. Here, well, of course, Liz Truss has been apologising for what happened, but there's a very serious attempt now to remove her as leader of the Tories and also a prime minister. Yesterday, the Jeremy Hunt, the finance minister, the Chancellor of the Exchequer, as we call him in this country, actually effectively ripped up the whole of the mini budget. The only unchanged change. Things are the reduction in national insurance, corporation tax. That's been reversed and the idea of a 1 penny off income tax has been postponed indefinitely. Piece by piece, the parts of the mini budget have been, as it's put occasionally this morning, tweaked and trashed. Whether or not, I mean, this helped the pound, it helped the gilts market. Whether it's done enough to regain the confidence of the financial markets, I don't know the answer to that question, and I don't think anybody does. We just keep our fingers crossed. One of the things that has arisen from all this is that the Bank of England can afford to take its break off slightly by raising interest rates. There had been fears it would be 1% when they meet on November, when they actually announce a decision on November the 4th. It's felt it might just be 0.75%, 75 basis points. And also the Bank of England has delayed sales of government bonds, which it doesn't want to destabilise the gilts market as it appears to be settling down. More strikes are looming in the UK. UK workers suffering 20 years of lost wage growth. The Trades Union Congress Conference and Trades Union Congress is meeting as we speak, and the General Secretary of that had said this has been the longest squeeze on real wages since Napoleonic times, she's saying now. And finally, commodities. Rio Tinto is warning of a continual slowdown, and unsurprisingly, really, particularly from countries like China. And oil is still weighing up whether or not a cut in production or a global recession is going to push the price one way or the other. So the jury's still out on that at the moment. That is the global view this morning.
Okay. Because of time, real quickly, as those reversals stabilize the market, I doubt there's still a run on the market. So what should be done as regards the market? And secondly, is this the beginning of the end for Trussonomics, or the end, in fact, for our premiership? Because the apologies a lot of people are now saying is not enough. That should put UK through this level of uncertainty.
I think it's the end of Trussonomics. I mean, whether it's the end of her, I suspect that the serious calls. You've got 100 MPs now asking for her to go. She's saying she's apologised for what she did. She wants to see the job till its end. And so, I mean, politicians always say that, don't they? As far as the economy is concerned, I mean, what basically we're back to traditional economic theory, and the fact of the matter is, it doesn't matter who's in power, there is very little room for manoeuvre. There will have to be tax increases, just as there are in most countries. It's not as it was during Thatcher's time. The NHS has got 7 million people post-lockdown on the waiting list, actually. So the public services are going to need a lot of attention as well. So I don't think anybody, Labour or the Conservatives, have a great deal of room for manoeuvre. But we're now back to orthodoxy. And this is what the market's objected to, away from orthodoxy. And what none of the politicians realised was, and why on earth they didn't realise this when they were doing it, is you go against the bond markets at your peril. Let us remind ourselves what bond markets are for. They are not for general amusement, and they're not for forecasting. What they're for is raising money that can't be raised for government spending over and above taxation. And it's been the same since that kind of finance was invented during the Napoleonic Wars, actually. It may even go back further than that. Unfortunately, my memory doesn't go back that far. But certainly what you don't do is you don't mess with the bond markets. And that's what this did. Now, whether the bond markets actually settle, I suspect they probably will, because we're back to the old orthodoxy again of having to look to where the big spending is actually going to be repaid from. I suspect that they will continue to settle down, but we're back to the old orthodoxy, whether you think that's a good or a bad thing.
Well, of course, with borrowing costs falling, with the pound rising, with investors showing some enthusiasm about Jeremy Hunt's presentation, setting a bonfire to about half of, or more than half, in fact, of the previous economic policies. A lot will depend on what happens on October 31 when he presents, that fiscal strategy. But let's go back to China. Now, China is delaying GDP data and other data. Even the monthly trade data that is supposed to be released on Friday, they've postponed it. Their Bureau of Statistics has refused to give any concrete reason. But what do you think could be the case? Is it because the data may not be pretty at all, or because the Communist Party just wants to focus on this their meeting, this Congress, and focus on Xi Jinping getting the third term that he wants?
I think that there probably is a lot of in what you say. I think that they would prefer the world's attention to be focused on the committee meeting of the Communist Party, rather than the. I suspect that those figures probably show a marginal slowdown. I don't think they're disastrous, but it's very unusual for these kind of statistics to be held. The only thing I can put it down to is, again, reflecting on what the president was saying a couple of days ago, that China is not necessarily all about rapid growth, and I think he is beginning to recognise publicly, or at least say publicly, that the future of China is very much down to the younger generation, and this is something that I've been banging on about for a long time. They will still suffer from demographic problems as their older workforce shrinks and more people actually retire. That is irreversible, and I suspect also that if the COVID lockdowns continue, if there is zero COVID policy, I suspect that will probably crimp economic growth as well. So throw all that into the mix, and and add the skepticism of the markets to all that. And I think that's what my answer to that is. That they're living through rather difficult times, and they don't necessarily want to publicise them right now.
Well, thank you very much, Michael Wilson. Now for business updates across the African continent, Rotus Odiri joins us. Good morning, Rotus.
Morning, Doctor. Good morning, Rufai. Good morning to all our viewers. Interesting that you're talking about China delaying data for a month. We haven't had unemployment data now for 2 years. We don't know how many people we are in this country, and there's a whole lot of holes in our data here in Nigeria as well. But speaking of data, inflation, that's data that's been consistent. We're at a 17-year high, 20.77% headline inflation. The usual suspects, food. You've got food prices rising, that's at 23% now. You've also got infrastructure issues, you've got routes to market, you've got power, you've got importation, you've got the FX issue. What's the Naira going for? 740? Might hit 800 before the end of the year. Just take a look at the numbers as far as inflation is concerned. So year on year, across the board, you're seeing an increase compared to year on year in August. So headline food, look at core inflation, which strips out volatile food items. Core inflation is at 17.6%. And that really is another worry. Urban inflation rule. On the other hand, month on month, though, you are seeing a deceleration, which the Bureau of Statistics chalks up to harvest activities. So, look, your purchasing power as a Nigerian is being eroded. Your real rates of return on your investments is negative as far as inflation is concerned. Now, there's just a whole bunch. Disposable income. We shouldn't even bother talking about wages moving in relation to inflation. It just continues to see the same issues here. These numbers are making global headlines as far as inflation around the world. They are causing all manner of issues. But here, I don't know, it seems to be, it's only the business community and the talking heads in the media that make this an issue. This is a really, really big issue that needs to be addressed in terms of how to bring these numbers down. Now, the floods that have killed over 600 people. If Boko Haram attacked a village and killed 600 people, we'll be talking about a massacre. If there was an explosion somewhere and 600 people died, we'll be talking about an incredibly, something that would probably bring the country to its knees. These floods are now have killed over 600 people, displaced 1.4 million of them. Farmlands have been impacted, so you're probably going to see inflation climbing when we look at the October numbers and even November, maybe even through the festive period. Now, Nigeria LNG Limited is saying that it's declaring a force majeure because its partners, its upstream partners in gas, they have also declared a force majeure because access to feedstock has pretty much been impacted with respect to these floods. This is going to have a revenue impact on the country. We already see, oil is down because of oil theft. That's on the one hand. Now you've got these floods. I mean, not to get spiritual here, but this, if you look at everything that has just hit this country so far this year, it is really, really bad. And again, we look towards the festive period, the fourth quarter of this year, to where GDP usually inches upwards because of the demand for food, hospitality activity, parties, and so on and so forth. But these floods, unless we address how to clamp them down pretty quickly, it's going to be an issue. There's a trending video, and I guess we'll leave that for Watch Trending, where one of the candidates was asked about climate change and the floods, and his answer was, So the candidates have to be, that was an example of putting one of the presidential candidates on the spot and asking them what they would do to be able to address this. We had a guest on the Global Business Report, Kelvin Emmanuel, an analyst in Abuja, who pretty much openly lamented that none of the candidates have talked about strategies that they will put in place in order to make sure this doesn't happen again going forward. So that's that. Agora is a think tank that has put together a number of options for revamping Nigeria's economy. This is what we want to specifically hear from the candidates in terms of how they will address a number of issues. So we looked at, this is not an exhaustive list, but they talked about ending petrol subsidies, ending oil theft, amending and enforcing a Fiscal Responsibility Act, boosting tax revenues by widening the tax net, sale and concession of government assets, active policies to promote SMEs, ending ways and means financing, and the central bank redefining its exchange rate objective. So, again, I'm looking forward to, I guess, the future leaders of this nation getting down to the brass knuckles of how this is going to work. The Ghanaian cedi is now officially the worst performing currency in the world, even past the Sri Lankan currency. IMF talks have continued, but now year to date it's down 45%. So they are really facing a crunch there. And finally, in Kenya, William Ruto, he just continues to hit the ground running. He's now saying that he's targeting about 10 to 15 companies on the Nairobi Securities Exchange within a year. Most of them are government-owned entities. So he's looking at sugar mills, he's looking at the ports. Can you imagine if the ports here were privatized and listed on the stock exchange?
That would make a lot of difference.
We really would. So that's what we're seeing across the continent.
I mean, it shows that, you see, when you put a right head in, it shows quickly. This guy is a right hand. There are many other things against me, don't get him wrong.
Of course.
Right? Ethnic problems and things like that, ICC and all of that. But in terms of business, you can't fault him. He's done a lot of business, real estate, Karen House in Kenya, and some other businesses, resort and things like this. So he knows it. And the way to get accountability, make those companies public. And he's doing it just like that. Inflation numbers in Nigeria, I mean, we all know the drill. I wrote the sad story that he's not kicked in yet. When his harvesting season, Olam can harvest about $20 million worth of rice. That's about 20-25% of the rice we get. You will see how the rice will go on. A real rice check in the market. Local rice has gone to about 40,000 naira per bag. Keeps tilting up. Foreign rice, different in case. So December period, it will come in strong. And this was the same inflation numbers that the last MPC meeting said they have put measures in place to decelerate inflation. But you see it's going up.
Yeah.
And it goes back to all of the legacy issues if you don't do them. I'm happy Agora put out that report. Can't our politicians just copy and paste that?
And,
because you can see how explicit that one is.
Right.
And that's why I keep asking them how. How? Take, for instance, end ways and means. That's it.
Yeah.
Those are real policy. I think they should stop just making promises and real policy statements and hit the ground running and tell us a little bit of how. And we have a clean campaign, not all this abuse and ratatouille talk.
Things that are not even relevant to the lives of Nigerians.
With Nigeria LNG declaring force majeure as a result of the floods, big problem. To the extent that before now, we had made the point that the floods this time around will result in food crisis. We have mentioned Olam Foods, Olam Agric, that produces about 25% of rice. Now, if that is out of the market, then of course food inflation price will go up.
Yeah.
And now you have Nigeria LNG. Nigeria celebrates that company,
Yep.
as a very good initiative. Nigerian managers have been saying, oh, we're actually a gas-producing company, and that is where the future is. Now, the same Nigeria LNG cannot get gas from its upstream suppliers. So they've declared force majeure, right? That will also have implications for revenue.
Indeed.
President Buhari, having said in the presentation of the budget, 2023 budget, that our biggest problem is revenue shortfall.
Right.
So that scope for the shortfall is going to be widened further. Okay, and force majeure, well, is beyond their control because everywhere is flooded. And it reminds us of the urgency of now to begin to address the issue of flooding, of climate change, and the absolute negligence that is responsible for all of this. As for inflation, well, this is foreseeable. If you have floods, if there is food crisis, things will only get worse. You know, and that National Bureau of Statistics figures, they may even be
understated.
Yeah. And then, of course, we're told that the inflation is more severe in Kogi, Rivers, Benue. The thing to do is to ask the question, why those three states? Because the rate of inflation, headline inflation in those states, is higher than the national country. Than the national
and the governor of one of those states, he keeps anyway. Go on, doctor.
In any case, these are the issues.
He's a belly dancer.
We have to deal with inflation. But if you want to console yourself, you may well say that, oh, in Sri Lanka, inflation is over 80%.
Yeah.
You may well say, oh, in
Turkey,
inflation is over 83%, with the projection that it could reach up to 100%. But Turkey has a buffer zone. It's very strong on production.
Yep.
Its fiscal balance is very strong. Okay, Sri Lanka may be a problematic case. Okay, what do we have in place here?
Right.
If the figures go up and go up, what do we have to protect the ravaging pandemic of empty pockets that all of this will result into, and hunger, poverty? Anyway, thank you, Reuters.
Thank you so much.